and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to find out what your principal and interest payment will be. Don't have a mortgage calculator? Shame on you. rsrlinks.com/mobile app. Rates yesterday. It's the latest data we have because the day today is not up yet. Most of them were up yesterday. Conventional 30-year fixed up 6.59%. Jumbo 30-year fixed 6.762. That was up. FHA 30-year fixed. That was the Lone Ranger. It was the only one that was down 6.322. VA 30-year fixed 6.178. That was up. And the USDA 30-year fixed 6.405. That one was up. What's going on in the markets? Well, if you want our report, we put it out each morning. rsrlinks.com/HBOD. It is a community we've set up just for the Ron Siegel Radio listeners. rsrlinks.com/HBOD. We put that market report in there. The Dow Jones is now up 11. The NASDAQ down 254. S&P down 227. And we're looking at the the 10-year Treasury. That one is up 2.5 basis points, 4.311. And we've got the mortgage-backed security. That's the bond. The bond is up 3 basis points. Remember, when the bond goes up, the rates go down. It's not moving hardly at all, so it doesn't really even matter. But I will tell you, one of the things that you look at here is you got to know who you're talking to. Because I'm looking at a chart right now, and I have it on my screen all the time. If I look at a 30-year fixed rate for Mortgage News Daily, they say it's 6.59. I told you already that OBMMI, they shared with us 6.59. Freddie Mac says 6.58. The Mortgage Bankers Association says 6.67. So you see, every place you go, you're going to find a different rate. So don't worry about what all these different rates say, because that's not your rate, because they don't put into account what your unique circumstances are. So just be aware of that. What's driving rates this morning? Well, Treasury Secretary Scott Bessent spoke on CNBC this morning, said that he will be interviewing 11 candidates for the next Fed chair, either right before or right after Labor Day, and then we'll begin to narrow down the list to present to President Trump. Also asked about the hot producer price index report, and he brought up an interesting point, saying that a big component of the rise was investment services, which goes up when asset prices rise. Of course, there was a tariff impact in there as well. The Zillow Rental Index reported that blended rates in July fell from 2.9% to 2.6% year over year. We've been seeing deceleration, but the figures in CPI and PCE, much higher. Biggest reason is the BLS is using guesswork. Have we talked about that one before?
Surprise, surprise, surprise.
Yeah, back again with those imputed figures. Owner's equivalent rent is at 4.1%. And when adjusted versus the Zillow numbers and applying the weighting in the CPI, core CPI is overstated by 0.5%. That means the core CPI would actually be 2.6% instead of 3.1%. Much, much better. Applying the same formula to core PCE and using the weighting, core PCE is overstated by 0.2%. That would be at 2.6% instead of 2.8%. Are you listening, Jerome?
Such an idiot.
Both of the year-over-year core inflation readings at 2.6% also include some impact of the tariffs. Hard to measure. Bottom line, if the BLS wants to get the inflation numbers correct, they have to start using real-time data and less imputed data. We hope that EJ Antony can make some adjustments so we can get more accurate figures. We don't want them to be partisan. We want them to be accurate. Housing starts and permits. The permits for the most forward-looking supply indicator fell almost 3% last month. Continue to trend lower to the lowest reading of the year. All of the decline was in multifamily, with single family up a modest 0.5%. Housing starts increased 5% to 1.43 million, but most of the gain was in multifamily. The single family starts level is the second lowest of the year and points to limited supply coming to market from new construction front in the future. Completions rose 6% with all of the gain coming from single family. This should help with a bit more single family supply in the near future. There's a lot of pent up demand and people on the sidelines waiting for rates to come down. If the Fed cut rates, mortgage rates will, if the Fed cuts rates and mortgage rates fall, which they may or may not, there will be a lot more demand. The National Association of Home Builders sentiment report stabilized around 32 the last few months, which is weak figure. And in contraction, traffic increased 2 points to 22, but from anemic levels. Builders' biggest challenges are elevated mortgage rates, weak buyer traffic, and ongoing supply side challenges. They said that affordability is the biggest challenge, and builders are pushing for the Fed cut. Now, if you watched our broadcast yesterday, you would know that we discussed affordability in a tremendous way. And we actually even showed you a method that, one family is getting a 5.375 interest rate, 30 years fixed rate. I don't have the APR. If you want to get all the specifics, rsrlinks.com/buydown, rsrlinks.com/buydown. And we did that in yesterday's broadcast as well. So you can go back and watch our presentation. That is the Mortgage Minute, brought to you by our friends at rsrlinks.com/mobile app, rsrlinks.com/mobile app.